Another day in crypto, another day where ChainOpera AI is outperforming the rest of the market. This trend hasn't just started today, it's going on for quite a while. The question is, how much longer can this rally last? Let's have a look at the on-chain data, the data most people are not considering. This is the performance today, but compare this to the performance this week. ChainOpera AI more than 3x'd. But the chart doesn't really look that pretty. We are now above $20. We have seen a massive pump, subsequent dump, and now we are recovering. Where does all of this volatility come from? And is it risky to buy now at elevated prices? I've published a video on ChainOpera 10 days ago already. Initially, the video underperformed the average video on this channel. The average video is here, this line in gray. But now, over time, more and more people are searching for ChainOpera. Now, if you want to be early next time, feel free to subscribe over here. I publish videos on various altcoins regularly on this channel. Now, the artificial intelligence of CoinMarketCap doesn't really give us any good reasons for the rally. Just a generic key driver as in AI sector momentum, derivatives frenzy, and a technical breakout. We don't really get any real news that could be fueling this rally. Yet the market cap went all the way up to 6 billion to then crash down to 1 billion to now being at 3 billion. The fully diluted valuation is at 17.6 billion. So only 19% of the entire supply is circulating. At some point, the supply will more than 5x from here. If the demand doesn't grow at the same rate, then the price should come down. Unfortunately, the project itself is not impressive at all. This is the website. We've got an AI terminal app, and that just looks like ChatGPT. I asked the AI, what's a fair price for COAI? And the answer was somewhere around $10 to $50 per token. The documentation gives us an insight into the tokenomics. More on that in a second. But not all numbers add up. For example, the project has almost 500,000 followers on x.com, formerly known as Twitter. Yet in the last 24 hours, we saw less than 800 wallets interacting with the token on chain. Despite the massive volatility, nobody is trading. The token is on the Binance Smart Chain with 45,000 holders, but I've got my strong doubts that it's purchases on the blockchain that's currently driving the price, because this is billions of dollars in market cap that we see in fluctuation. On the left side, we see the number of holders that have at least 50 COAI tokens. So at the current price, that's roughly $1,000 worth of the token. For the chart in the middle, it's 500 tokens or $10,000. For the chart on the right, it's 5,000 tokens or $100,000 worth of the token. We do not see how the number of wallets is going up for any of those wallet cohorts. The whales tended to offload the fastest, but even the small retail investor, he's not interested. It tends to rather trickle down. Yet the price development tells a very different story. This is ChainOpera AI relative to the others market cap. It almost looks like constant growth, but that's just because this is a linear scale. On a logarithmic scale, we see the pump, subsequent dump, and recovery. There have been a lot of venture funds investing into COAI. And so while this chart in the documentation looks quite interesting, really what matters is the circulating supply over time. The time scale is here at the top. So over the span of 4 years, we will see the number of COAI tokens quadruple. And so that's probably what's going on. There's a lot of volatility in the token that gets artificially generated by those early investors to hopefully attract some attention by retail investors that then might buy into the token. It's already partially working, right? We do see more and more searches for the token. Volatility creates attention and creates demand. And when the market cap can rise higher and higher, the insiders can offload over time for an acceptable price. Now, since there are already token unlocks, why is the price going up? Why don't we see enough sell pressure by those insiders? What I think is going on is a very similar effect to what we've seen with Mantra DAO or the Ohm token. Ohm has very similar tokenomics, as in there are unlocks pretty much from day one. Yet initially we saw a very nice appreciation in the price. And that was because of over-the-counter transactions. So sometimes what's happening is that insiders sell their tokens that are about to get unlocked in the future to other parties at a discount. so that other party is buying the token for a lower price, potentially shorting the token at the same time on the perpetual futures market, so that then the discount can be locked in. But very often the proceeds that come from those over-the-counter deals, they get bound to token acquisitions directly on chain. And so as there are deals happening in the background and that capital flows into the asset, we see price appreciation. Feel free to check out CoffeeZilla's video about Mantra DAO. Once we saw the real unlock, that's when the price very quickly crashed. For Mantra DAO, it was extremely fast, 90% in a single day. So if you want to know more about the mechanisms, here is that interview of Voidzilla interviewing the CEO of crypto, which crashed 90%. There is a chance that something very similar is now happening for COAI. Now, most trading volume is not happening on the spot market right now. On the spot market, we saw 177 million worth of trading volume, but on the perpetual futures market, we saw 1.9 billion worth of trading volume. So more than 10x the trading volume. It's really the bets on the price with leverage that's moving COAI. Now, why does this matter? It matters because everybody that buys via the perpetual futures markets tends to just speculate on an asset short term, because holding an asset long term on the perpetual futures is very expensive because of the financing costs. But holding it just short term is very cheap because of the very narrow spread, because of the low transaction fees. So in other words, if we want to get in and out of a token very quickly, we should use the perpetual futures, potentially with leverage. If we want to hold a token long term, we buy it on the spot market. And so when there's much more trading volume on the perpetual futures, that means many people are just short term speculating on COAI, and that's potentially a risk. Right now, the vast majority of traders on the perpetual futures are betting on falling prices. So the funding rate is negative. The shorts have to pay the longs. Now, there are three potential explanations for this. The first explanation is that all of the shorts already got liquidated with the rally. And so now the few remaining shorts have to pay the vast majority of longs. Thus, we see a negative funding rate. The second possibility is that it's over-the-counter dealers that simply just hedge the discount that they got. The third explanation is that there's simply enough people that saw this rally that think that this is manipulated because the fundamentals aren't really justified, right? It's just ChatGPT on the website. Most people think this is manipulation, and they simply just bet on reversal of the price. If the third is true, we might see a continuation of the rally, because if enough retail investors are currently betting on falling prices, the market makers might consider to buy more of the token and short squeeze all of those pessimistic traders. The open interest, so the amounts of bets, are not at an all-time high. So that speaks not necessarily for explanation number 3, but for explanation number 2. People got squeezed out of the market, people got liquidated, which as a result would lead to the funding rate normalizing rather sooner than later. The liquidations have indeed been quite high, but they didn't necessarily spike with the rally in the last few days. What I'm taking away from all of this data is that the market cap is extremely inflated now, and at some point it's very likely going to come down. That being said, there might be more volatility because the insiders, they want to dump at those elevated prices. It's very risky to buy COAI now. It might be possible to bet on falling prices, but probably today isn't the best day, because very often when there is a short squeeze, we just have to wait for a while. We see a secondary short squeeze, maybe even a third one. So it's best to bet on falling prices when the attention is already died down, when nobody looks at the token anymore, when then the market makers can slowly offload their supply again. I don't think we will be at $20 forever. I do think that COAI will come back down to $10, maybe even $5, but I'm not willing to bet on that just yet. I want to see attention on the token normalizing first. We have to see less liquidations. We have to see less trading volume on the perpetual futures as well. Now, there are different ways to interpret the current market situation. What we see over here is a long-term chart of the stablecoin market cap. This starts in 2022. We had the Terra Luna collapse over here, where then the market tended to shrink until October of 2023. So the stablecoin market cap went down by 27%. But since then, this chart is going up. Now, when the stablecoin market cap is going up, that means people are moving their funds from the fiat ecosystem, from traditional finance, into crypto. People are sending their hard-earned cash, say, to Binance. Binance sends it over to a stablecoin custodian. The stablecoin custodian is buying bonds. The stablecoin custodian is making money via interest. issues the stablecoins, and the stablecoin issuance can be seen in this chart. So whenever this is going up, money is getting into the space. And that means crypto prices should, as per tendency, rather go up. How much should they go up? Have a look at this here. In red, we see the crypto market cap except the stablecoins. So all the cryptos, Bitcoin, Ethereum, and all these smaller cryptocurrencies. And of course, they tended to go up since the stablecoin market cap increased, but they went up more, right? 270%, while the stablecoin market cap went up only by 130%. But there is a catch here. I don't necessarily think that most cryptocurrencies will grow faster than the stablecoin market cap. Because here's the thing, there's not just the stablecoin market cap, there's also the degree to how much those stablecoins are getting deployed. Some people might just transfer their stablecoins to Binance, hold that in their wallet, and then wait for a while until they actually buy altcoins with it. The trading from stablecoins into risk on volatile cryptos and from volatile cryptos back into risk of stablecoins, that's actually what causes the short-term fluctuations in the market. Because obviously the stablecoin market cap is going up much more smoothly than the prices. And that is because of stablecoin deployment. Now this here is the stablecoin dominance, and it trades between 5% and 9% of all of crypto. Have a look at this yellow circle here. This is when the stablecoin market cap tended to turn around, when there's more money flowing into the system. So from that point to today, we have seen the stablecoin dominance go down. So the market as a whole got more risk on. There's less dry powder on the side now than there used to be in October of 2023. When we actually compare 2 points where the stablecoin dominance was very equal, then we are getting a different picture. So this red circle over here is the same time with that red circle over here. And so the stablecoin market cap went up by 128% since the beginning of 2024, while the stablecoin market cap went up by 115%. So the growth rates are extremely similar. When the stablecoin market cap goes up by 10%, then crypto prices on average should also go up by 10%, maybe slightly more. But there might as well be zero difference if we just come a little bit more down in the crypto market cap. So really, the two growth rates are very similar. We have to work with how quickly the stablecoin market cap is expanding. And so how quickly is it expanding? In the last 12 months, it went up by 65%. In other words, if we don't see any systemic implosion, if we don't see something like the FTX collapse or the Terra Luna implosion, if the market continues to expand, then we should work with a growth rate of 64-65% per annum from here across all of crypto. That's how fast the stablecoin market cap is going up, and it's doing that expansion at a quiet, consistent rate. Now then we have to wonder, if we are in a bull market since October of 2023 and we are expanding at roughly 65% per annum, does this also mean that it warrants to get more risk on, to potentially buy more altcoins and potentially sell Bitcoin? Let's have a look at the altcoin performance since October of 2023 relative to Bitcoin. This point in time over here, this circle equates to this point in time over here. This is now total 3 ES, so the altcoin market cap minus the stablecoins relative to Bitcoin. So how did the altcoin market cap do relative to Bitcoin? And it actually went down. Bitcoin outperformed during this expansionary period. The altcoin market cap went down by 17%. The problem is that this chart is even underrepresenting of how bad the altcoins did. This here is much more representative. Remember, the stablecoin market cap went up by 65% in the last year. This is the performance of the smaller altcoins in the last year. Most of them went down. They did not on average appreciate by 65% or maybe a bit less than that, let's say 50%, because of this underperformance. The price performance seems to be much, much worse. And the reason for that underperformance is token unlocks. So early investors and the team and insiders, consultants, etc., they get token allocations over time. They get vesting periods and they can then sell those tokens. There are various pages describing the situation. This is coinmarketcap.com/token unlocks. We can see how there are several unlocks across many different cryptocurrencies. So let's say a cryptocurrency is at 1 million tokens, and then come all of those vesting unlocks. All the insiders get access to newly minted tokens. The supply goes from 1 million to 2 million. then maybe the price gets cut in half, but the supply has doubled. The market cap of that altcoin is unchanged. But everybody that bought the altcoin, they lost 50%. So the insiders dump on the retail investors. And that effect is not seen in market cap comparisons. That's why we cannot use the others dominance or the total 3 dominance or even the Bitcoin dominance. The Bitcoin dominance should be much higher, as in if we just compare prices, not necessarily market caps. Let's have a look at a few of those altcoins here. Minus 99.5% over here, minus 99.9% over here. This went up initially, but from the top of 30 cents, this also crashed massively to 2 cents because probably that's when the people started to sell. Then we've got here minus 56%, or over here minus 61% ApeCoin. And this is much more in line with this picture over here, right? Charts like this. Let's actually have a look at ApeCoin in a bit more detail. This is the number of circulating ApeCoin over time. We started at 284 million and now went up all the way to 940 million. So the supply more than 3x'd. And who got those tokens? Again, it's the insiders that dump on the project. They take the money. And so the straightforward approach would just be to bet on falling prices of most altcoins, especially on the altcoins that tend to have a rising supply. So when ApeCoin goes down, let's just bet on falling prices and get this return instead. The problem is that we do have a lot of volatility here. This is a crash of 74%. So betting on falling prices can also be a problem if there is positive news and we see a temporary rally in the price. But we can mute this risk somewhat. Because one of the reasons why sometimes those short positions can also be dangerous is because the market as a whole might go up. When Bitcoin goes up, when Ethereum goes up, then most altcoins go up as well. So really what we are interested in is the ApeCoin performance relative to Bitcoin. This is now Bitcoin divided by ApeCoin. And this is much less volatile. This only dropped by a bit over 50%. Have a look at the volatility of this chart versus this chart. Isn't it much better to invest in this instead of into this? All of those drops here were just the market itself going up. It was not ApeCoin doing particularly well. This, by the way, is a logarithmic scale. On a linear scale, this looks much more juicy. This is how we make money in crypto. And this is a very uncommon approach, right? Most people, they try to find the next hidden gem. They buy an altcoin portfolio. They have maybe 10, 20 altcoins. Try to find the next thing that does another 10 or 100x. But I don't think that's the best way to go about this. Do you really want to find a winner in a market that looks like this? Do you really want to scan the market and find the next wallet token that makes 53%, where at the same time Bitcoin doubled? I don't think so. I think it's much better to turn everything that's red on this chart to green and everything that's green on this chart, which isn't much, into red. I'm following this approach already for the last 4 years, and had I just dollar cost average into Bitcoin, I would have gotten the performance here in light gray. But because I also bet on falling altcoin prices, I got the performance here in black. It's a constant outperformance. It's not about finding the next 100x luck shot. And so I'm talking about the strategy in more detail in the premium membership of this channel. Here are a few trades that our members have shared that shorted various altcoins with high token inflation. And I made several videos on the topic as well. Now, you don't have to watch everything over here. There's only 2 very important videos using perpetual futures to bet on relative valuations and risk management with relative valuation bets. Risk management is extremely important. Here's the first video, it's 34 minutes. Here's the second video, it's 28 minutes. And the reason why I say risk management is so important is because there is a lot of volatility within the perpetual futures market as well. And if you don't know how to handle leverage properly, if you don't know how to do proper position sizing, then you will lose your funds. You will not make this kind of returns. The recent shakeout in the market actually helped us. It was one of the best weeks we've ever had. We made 10% on our copy trading capital pool. Now, once you've joined Premium and you've watched the 2 videos, I will share my favorite trade with you. It's something like ApeCoin, but better. If you don't make money with that trade when holding it for 1 month, then I will refund the membership fee for you. So really, you're not risking that money. You're not risking the 125 US dollars. If you're not making money with the trade that I'm sharing, I'll just send that money back. no questions asked. Now I've talked about this trading pool over here. This was a project launched in July of this year. Again, where we were following relative valuation trades. Everybody that got in this is already up 19%, where at the same time Bitcoin lost 9%. Now unfortunately this capital pool is already closed, but if you're part of the annual members, you will get access to the next pool in January of next year. Feel free to check out the tutorial video of the last trading pool. Again, it's an approach to bet on charts like this without having to execute the trades yourself. I simply just trade for you. I'm of course sharing all my trades to every member, but if you want to become part of this project, then you can also consider joining up for the annual membership. So that's over here. You're also saving $250 per year doing so. But you can simply start off with the monthly membership and then switch over to yearly afterwards. A link to premium pops up directly here on the screen. Just click on that. It will lead you to the website. If it's the very first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in premium. Cheers.